Today, we're going to go under the hood of a company called Aries Agro Limited. We're taking their public financial reports, those super dense pages of numbers, and we're going to translate them into a clear story about how this company is actually doing.
Yeah, if you've ever looked at a financial statement and just felt your eyes glaze over, you're definitely not alone. It can look like a wall of impossible numbers, but the truth is, hidden inside all that data is a story. And our job today is to pull that story out and make it crystal clear.
So here's the game plan. First, we're going to crack the code of what these financial statements even are. Then we'll dive into their profit story, take a quick snapshot of their overall financial health, follow the actual cash flowing in and out, and then at the end, we'll put all those pieces together to see the big picture.
To really understand any company, you can't just look at one thing. You need to look at it through three different lenses. And luckily for us, these are the three standard financial statements that every public company has to prepare. Each one tells us something totally unique and really important.
Before we get tangled up in the official terms, let's just use some simple analogies. The first statement is like a school report card. It grades the company's performance over a period of time. The second is like a snapshot photo. It captures just one single moment. And the third? It's basically the company's bank statement, showing money in and money out. Simple, right?
Okay, so lens number one, the income statement. This is the report card. It tells us how the company did over a specific time frame, say a quarter or a whole year. It starts with all the money they made from sales, then it subtracts all the costs of running the business, and it spits out the bottom line. Did they actually make a profit or did they lose money? Next up is the balance sheet. This is our snapshot photo. Now, unlike the report card, which covers a stretch of time, this is a picture of the company's finances on one specific day. It's a simple list of everything the company owns, we call those assets, and everything it owes to other people, we call those liabilities. In our third and final lens is the cash flow statement. You can think of this as the company's bank statement. This one is my favorite because it cuts through all the complicated accounting stuff and just follows the cold, hard cash. It shows you exactly where the money came from and exactly where it went. It doesn't lie. All right, now that we've got our tools, let's put that first lens, the income statement, to work. We're going to dig into the profit and loss story for Aries Agro. And the question we're trying to answer is pretty simple. Are they actually making any money? Now, to tell a good story, you need a little context. So we're not just looking at one report. We're going to compare a few key moments in time. We'll use September 2019 as our sort of pre-pandemic benchmark and see how things have changed by comparing it to the latest numbers from September 2024. And whoa, check this out. This chart tells a big part of the story right away. This is revenue, so total sales. Back in the September 2019 quarter, Aries Agro brought in about 93 crore rupees. Now fast forward 5 years to September 2024, and that number has shot up to 181 crore. It's almost doubled. That is some seriously impressive growth in sales. But of course, you know how it goes. More sales usually means more costs. And we definitely see that here. Their expenses also shot up from 78 crore to 162 crore. So this is the crucial question. Did that huge jump in revenue actually lead to more profit, or did all those rising costs just eat it all up? And here is our answer. After you subtract all those expenses, Aries Agro was left with a profit of 17 crore rupees for the quarter. But what's really important is that this is actually up from the 14 crore they made back in 2019. So even with that huge jump in costs, they still managed to grow their bottom line profit. That's a really strong sign. Okay, let's switch gears. We're moving on to our second lens, the balance sheet. It's time to take that snapshot photo of the company's health. We're going to freeze time on September 30th, 2024, and see exactly what they owned and what they owed on that single day. So this illustrates the single most important rule in all of accounting. Everything a company owns, its assets on the left, has to be perfectly balanced by who has a claim on those assets. And those claims only come from two places: people they owe money to, which are liabilities, and the owners themselves, which is equity. And for Aries Agro, you can see it balances out perfectly. So what's actually in that 537 crore pile of assets? Well, the vast majority, we're talking 79%, are current assets. That's just a fancy way of saying it's stuff like cash, products they plan to sell soon, and money that customers owe them. It's all stuff that's expected to turn back into cash within a year. Now let's flip to the other side, what they owe.
Of their 269 crore in liabilities, a huge 85% are current liabilities. What that means is they have a lot of bills that need to be paid in the very near future, within the next year. This is a really key detail. It means the company has to constantly manage a big pile of short-term IOUs.
You know, there's a saying in finance, profit is an opinion, but cash is a fact. So let's move to our third and final lens, the cash flow statement. It's time to see where the real money actually went during the first half of their fiscal year.
Cash flow is always broken down into three main buckets. You've got operating cash, which is money from their main day-to-day business. Then there's investing cash, that's money spent on big stuff like factories or equipment. And finally, financing cash, which is money from taking out loans or paying money back to owners and lenders.
In this chart, this tells such a powerful story. Look at that first bar. The company's main business generated a super healthy 63 crore rupees in cash. So what do they do with it? Well, they spend a tiny amount, 2 crore, on investments, and then they use a massive 49 crore for financing, which for them meant paying down their debts and paying dividends to their owners. The core business is a cash machine that's funding everything else.
So we've looked through our three lenses, right? The report card, the snapshot, and the bank statement. Now it's time to put all those different views together and paint the big picture for Aries Agro.
It really boils down to these three things. First, the profit story. It's a story of fantastic growth in both sales and profits. Second, the health snapshot. The company is on solid ground, but they are juggling a lot of short-term debt that needs managing. And third, the cash story. Their main business is an absolute cash-generating beast, easily funding everything else they need to do.
So, by decoding these three statements, we actually get a surprisingly clear story. We see a growing, profitable company that's also a cash machine, and it's actively using that cash to manage its debt. But here's the thing. Financials only tell you about the past. They're like looking in the rearview mirror. The real question, especially for an agro company, is what happens next. How will things that you can't find on a spreadsheet, like a bad monsoon season or a change in government subsidies, how will those things shape the next chapter of this financial story?